Dear students, I am Dr. Narendra Kumar, PGT Commerce. Today we will take up accounting for partnership, basic concepts, and the learning objectives of today's sessions are: number 1, need of partnership; number 2, meaning of partnership; number 3, features of partnership; number 4, contents of partnership deed; number 5, rules in absence of partnership deed; number 6, meaning and purpose of profit and loss appropriation account; number 7, format of profit and loss appropriation account; and number 8 is journal entries. So, do you know about the sole proprietorship? A business which is controlled and managed by a single person is called sole proprietorship. In sole proprietorship concern, only one man invests the capital, undertakes the risk involved in the business, and controls the whole affairs of the business. But one man's capital, controlling, and the capacity of taking risk is generally limited. Therefore, persons may enter into agreement to form a partnership firm. As per the Partnership Act 1932, when two or more persons join hands to set up a business and share its profit and losses, they are said to be in partnership. In simple words, we can say when two or more persons run a lawful business and share its profit, it is called partnership. Students, after definition, now we will discuss some essential features of partnership firms, and these are as follows. Number 1, number of partners, minimum is 2 and maximum is 50 as per the Companies Rule Act 2014. Number 2, agreement. Partnership is formed by a written or oral agreement among partners, but presently partners prefers written agreement. Number 3, business. Partnership is formed for doing some business, not for co-ownership. So there must be a business. Number 4, sharing of profit. Partnership is formed for the objective of earning and sharing profit in pre-decided ratio. Association for welfare activity is not called partnership. Number 5, mutual agency. Each partners play a role of both agent and principal for each other. That means he will act as a principal and agent as well. Number 6, liability of partnership. Each partner's personal assets may be used for paying business liabilities, because each partner has unlimited liability individually and jointly. Students, now we will discuss about partnership deed, because partnership deed is essential part of the partnership business. Partnership comes into existence as a result of agreement among the partners. The agreement can be either oral or written. The Partnership Act does not require that the agreement must be in writing, but whenever it is in writing, the document which contains terms of the agreement is called partnership deed. Students, after definition of partnership deed, now we will discuss some contents of partnership deed. Contents of partnership deed. The partnership deed usually contains the following details: names and addresses of the firm and its main business, name and addresses of all the partners, amount of capital to be contributed by each partner, the accounting period of the firm, the date of the commencement of partnership, rules regarding operation of bank accounts, profit and loss sharing ratio, rate of interest on capital, loan and drawing, etc. Mode of auditor's appointment, if any. Salaries, commission, etc. if payable to any partner. The rights, duties and liabilities of each partner. Treatment of loss arising out of insolvency of one or more partners. Settlement of accounts on dissolution of the firm. Method of settlement of disputes among the partners. Rules to be followed in case of admission, retirement, death of a partner, and any other matter relating to the conduct of business. Dear students, partnership deed is an important document. But if there is no partnership deed, then the provision of Indian Partnership Act 1932 will be applied. Now let us discuss the rules of Partnership Act in the absence of partnership deed. Number A. Profit sharing ratio. If the partnership deed is silent about the profit sharing ratio, the profits and losses of the firm are to be shared equally by partners, irrespective of their capital contribution in the firm. Number B. Interest on capital. No partner is entitled to claim any interest on the amount of capital contributed by him or her in the firm as a matter of right. However, interest can be allowed when it is expressly agreed to by the partners. Thus, no interest on capital is payable if the partnership deed is silent on the issue. Next is number C. Interest on drawing. No interest is to be charged on the drawings made by the partners if there is no agreement in the deed. Number D. Interest on loan. If any partner has advanced loan to the firm for the purpose of business, he or she shall be entitled to get an interest on the loan amount at the rate of 6% per annum. Next is E. Remuneration for firm's work. No partner is entitled to get salary or commission or other remuneration for taking part in the conduct of the business of the firm, unless there is a provision for the same in the partnership deed. So, as you already know, the profit and loss account. Now, we will discuss about profit and loss appropriation account. You can see on the screen. Profit and loss appropriation account is merely an extension of the profit and loss account of the firm. It shows how the profits are appropriated or distributed among the partners. All adjustment in respect of partner's salary, partner's commission, interest on capital, interest on drawings, etc. are made through this account. It starts with the net profit as per the profit and loss account. Students, now we will discuss the format of profit and loss appropriation account. In credit side, we will show profit and loss account if there is a profit, interest on drawing, and if some divisible loss, then we have to distribute it also in the credit side. In the debit side, profit and loss if there is a loss, interest on capital, salary to partners, commission to partners, and if there is some divisible profit, then we have to distribute it in the partner's capital account or current account. So far, we have discussed how to prepare profit and loss appropriation account. Now, we will discuss how to make journal entries. Journal entries. Number 1. Transfer of the balance of profit and loss account to profit and loss appropriation account. Number A. If profit and loss account shows a credit balance, that is net profit, entry will be profit and loss account debit to profit and loss appropriation account. B. If profit and loss account shows a debit balance, that is net loss, the entry will be profit and loss appropriation account debit to profit and loss account. Number 2. Interest on capital. Condition number A for allowing interest on capital. Entry is interest on capital account debit to partner's capital or current account. Individual accounts of partner's capital or current account. Number B, for transferring interest on capital to profit and loss appropriation account. Entry is profit and loss appropriation account debit to interest on capital account. Interest on drawing. Number A, for charging interest on drawing to partner's capital account. Partner's capital or current account debit to interest on drawing account. Number B, for transferring interest on drawing to profit and loss appropriation account. Interest on drawing account debit to profit and loss appropriation account. Journal entries for partner salaries. Number A, for allowing partner's salary to partner's capital account. Entries salary to partner's account debit to partner's capital or current account. Number B, for transferring partner salary to profit and loss appropriation account. Entry will be profit and loss appropriation account debit to salary to partner's account. Partner's commission. For crediting commission allowed to a partner to partner's capital account. Entry will be commission to partner's account debit to partner's capital or current account. Number B, for transferring commission allowed to partners to profit and loss appropriation account. Entry will be profit and loss appropriation account debit to commission to partner's capital or current account. Entry for share of profit or loss after appropriation. Number A, if profit and loss appropriation account debit to partner's capital or current account. Number B, if loss, partner's capital or current account debit to profit and loss appropriation account. Here we have to note, in case firm suffers a loss, no interest on capital, salary, remuneration is to be allowed to partners. So now we will take a quick recap. So guys, we have discussed partnership. Partnership is the relation between two or more persons who have agreed to share the profit of a business carried on by all or any of them acting for all. Partnership deed. Partnership comes into existence as a result of agreement among the partner. The agreement can be either oral or written, and written agreement is called partnership deed. Next is profit and loss appropriation account. It shows how the profits are appropriated or distributed among the partners. If there is no partnership deed among partners, profits should share equally and interest on loan should be 6% per annum. It's now time to note down your assignment related to today's session. Amit, Babu and Charu set up a partnership firm on 1st April 2019. They contributed rupees 50,000, 40,000 and 30,000 respectively as their capitals and agreed to share profit and losses in the ratio of 3, 2 and 1. Amit is to be paid a salary of rupees 1,000 per month and Babu a commission of rupees 5,000. It is also provided that interest to be allowed on capital at the rate 6% per annum. The drawing for the year were Amit rupees 6,000, Babu rupees 4,000 and Charu rupees 2,000. Interest on drawing of rupees 270 was charged on Amit's drawing, rupees 180 on Babu's drawing and rupees 90 on Charu's drawing. The net profit as per the profit and loss account for the year ending 31st March 2020 was rupees 35,660. Prepare the profit and loss appropriation account to show the distribution of profit among the partners. Students, now with this we have now come to the end of today's session. I hope you have enjoyed the session. Thank you very much.